The situation surrounding Federal Reserve Chair Jerome Powell has entered a new phase after months of legal and political tension. U.S. federal prosecutors announced they were ending the criminal investigation connected to him. At first glance, this may seem like a routine legal development, but in reality, it carries major implications for U.S. monetary policy, White House influence over the Fed, and market expectations for future interest rates. The investigation focused on cost overruns related to the renovation of the Federal Reserve's headquarters in Washington. Reports suggested the project had risen to around $2.5 billion, exceeding the original budget by hundreds of millions of dollars. Powell denied any wrongdoing and argued that the probe was part of broader political pressure aimed at weakening the Fed's independence. Now, with the investigation being dropped, attention has shifted toward Kevin Warsh and his possible confirmation as the next Fed chair. Some Republican senators had hesitated to support his nomination while the probe remained active. With that obstacle removed, Warsh's path through the Senate now appears much smoother. The most important market reaction is that investors interpreted the news as a sign of potentially easier monetary policy ahead. Following the announcement, U.S. Treasury yields moved lower. In particular, two-year yields declined, suggesting markets are increasingly pricing in the possibility of future rate cuts. Donald Trump has repeatedly criticized Powell and pushed for lower interest rates. Because of this, many market participants believe that if Warsh becomes Fed chair, policy decisions could become more aligned with the White House's economic agenda. That could mean faster rate cuts and stronger stimulus for the economy. However, economists warn that the issue goes beyond simply replacing one person with another. The real concern is the independence of the Federal Reserve. If the central bank is seen as being influenced by politics, long-term inflation risks could rise, the U.S. dollar could weaken, and investor confidence could be damaged. Although Powell's term as chair may end, he still has the legal right to remain on the Fed's Board of Governors until 2028. That means he may continue to play an important role within the institution and help preserve internal balance. The key question for markets now is whether Warsh would act independently or follow political pressure from the White House. The answer will matter not only for the United States, but also for global markets, gold, the dollar, Bitcoin, and emerging market currencies. In short, the closure of the investigation into Powell is more than just a legal headline. It may mark the beginning of a new monetary era in the United States. If a new leadership team accelerates rate cuts, markets could enter a fresh rally. But if fears of political interference grow, the result could be increased volatility and uncertainty.